Hello students, we will be continuing with the rest of accounting terms. Let's start with purchase. Purchase means purchase of goods in which an enterprise deals. This includes purchase of raw material and purchase of finished goods for the purpose of sale. For example, XYZ Limited bought stationery costing $100. After purchase, the next term is purchase return. It is that part of goods purchased which are returned to the seller. Purchase return can be due to any reason such as inferior quality, damage, not according to the order or requirement, etc. It is also known as return outward. For example, ABC Limited purchased raw material costing $1,500, but it returned goods costing $150 as it was not according to the specifications. Now this is called purchase returns. After purchase, a very important task for a business is sales. Sales means sale of goods in which an enterprise deals. Sales can be made on cash or credit basis. Sale of an asset is not treated as sales. And lastly, sale is recorded after deducting trade discount. Next term is sales return. It is that part of goods sold which are returned by the customers. Sales return can be due to any reasons such as inferior quality, damage, not according to the order or requirement, etc. It is also known as return inwards. For example, ABC Limited sold goods costing $2,000, but the buyer returned goods costing $150 as it was not according to the specifications. Now this is called sales return. Next term is profit. Excess of revenue over expense is termed as profit. For example, sale is worth $50,000 and expenses is worth $20,000. Then the profit is $30,000. That is $50,000 minus $20,000. Now profit can be of following types. First one is gross profit, that is sales minus cost of goods sold. And next one is net profit, that is gross profit minus indirect expenses plus indirect incomes. Moving on to next term, that is income. Increase in the net worth of the enterprise either from business activities or other activities is termed as income. Next one is solvent. Solvent are those persons and firms who are capable of meeting their liabilities out of their own resources. And the next one is insolvent. Those business firms which are not capable of meeting their liabilities out of their assets are known as insolvent. Moving further, next one is cash discount. A cash discount is a deduction allowed by the seller of goods or the provider of services in order to motivate the customer to pay within a specified time. The seller or provider often refers to the cash discount as sales discount. The buyer often refers to the same discount as purchase discount. In simple words, it is a deduction in the amount of invoice allowed by the seller to the buyer in goods or services. Moving on to trade discount, it is the discount given by the seller to the buyer as a deduction in the list price of the commodity, that is trade discount. In order to simplify, trade discount is the amount by which a manufacturer reduces the retail price of a product when it sells to a reseller rather than to the end customer. Thank you.